Hi everyone! Today we are going to take a close look at Teqnion. This is a company that owns lots of small businesses in the industrial world in Sweden. Instead of controlling everything, Teqnion gives some support to these businesses, but mostly they let them do their own thing. So let's dive right into it. I'm so excited to go into this business model and teach what I learned to you guys. Teqnion's business model is like a big tree with various types of fruits on it. Each fruit represents a different company that Teqnion owns. These aren't just any companies though. They are ones that are already healthy, have strong position in the market and are often involved in high-tech industries. These companies can be grouped in three types. Agency businesses, think of these as stores that sell products made by popular brands. Imagine a local electronics store that sells Apple, Samsung or Sony products. They don't make the products themselves, but they sell other people's products. We also have product and service companies. These are like artisan bakeries that came up with their own unique bread recipes to cater to a specific group of bread lovers. They develop solutions for very specific industry needs. Another type is manufacturing industry. These are factories that make products either under their own name or for other companies. Picture a factory that makes toys. Some of the toys are sold under the factory's own brand, while others are sold under different brands. Now, all these companies, or fruits on the tree, operate independently. They have their own leaders and make their own decisions to stay competitive in the markets. Teqnion, the tree, provides resources and support when needed, but mostly lets the fruits grow on their own. This way, the people running each company stay dedicated and committed because they're in charge of their own success. Now, speaking of management, Teqnion is led by the CEO Johan Steene and the CXO Daniel Zhang. Steene, a co-founder of Teqnion and an ultra-marathon runner, owns significant shares in the company. His direct involvement aligns the company's goals with shareholders. Zhang, the CXO and former McKinsey and Bain & Company employee, owns shares and plans to buy more. He even mentioned he buys shares only on the open market. He dreams of turning Teqnion into a Swedish version of Berkshire Hathaway. The latest records show Zhang bought most shares in November 2022, while the company's chairman, Berggren, sold some. Both Steene and Zhang have never sold any shares, showing their long-term commitment to Teqnion. Now let's get into Teqnion's history. Well, in April 2019, Teqnion went public on the Nasdaq First North Growth Market, valued at around 340 million Swedish krona, which is the currency they use in Sweden. The same year, Teqnion bought Marquis City, Dandy Dots, and HEM1. By the end of 2019, the group had 13 subsidiaries. In 2020, the company acquired Injab and Wyma Propulsion. Changes in the executive team included the election of Sigrun as chairman and the appointment of Niklas Wigren as CFO, who was later replaced by Susan Helgeson. Throughout 2021, Teqnion continued to grow its portfolio with several acquisitions, including Cutting Metal Works, Kama Commercial, Walmec, Teltec, Inoguard, and Vicky Technic. In 2022, Teqnion made further acquisitions, including Bell Coachworks Ltd, Reward Catering, and Lundhall Transformers. These companies continue to operate independently with support from Teqnion when needed. The addition of these companies to Teqnion's portfolio contributes to its growth and variety in different industries. Teqnion aims to become a leading industrial trading group in the Nordics. So now I'd like to discuss in more detail all the sectors or industries that Teqnion operates. Being a multinational company that operates in various industries with a portfolio of companies that specialize in niche areas, their key sectors can be summarized as follows. Defense and military. Air Target Sweden, a provider of equipment for military practice shooting, stand out in this sector. Then we have vehicle manufacturing and transport with Bell Coachworks, which specializes in manufacturing bespoke vehicle transports, especially for luxury and armored vehicles. With biotechnology and clinical research, we have CellUp Nordia, which offers comprehensive solutions in pathology, histology, cytology, cell and molecular biology. Metalworking and manufacturing with CMW, which provides contract manufacturing in chip cutting metalworking, while Stance and Press offering customized sheet metal fabrication. Printing and branding with Dandy Dots, which offers flexible printing solutions with a focus on vinyl and paper printing. Healthcare and assistive technology with EloFlex, which leads the market in the foldable electric wheelchairs. Then we have electrical safety and lighting protection with Elrond Component, which offers complete solutions for a safe electrical environment within automation and installation. From the industrial supplies and logistics, we have GB, providing customized logistics solutions for industry. Then from construction and housing, we have Grimstorps, producing wooden building components, and Ham1, which sells architect-designed detached houses. In the industry of electrical engineering and transformers, Injab is a leading supplier of measuring transformers, while Lundhall Transformers is a world-leading manufacturer of transformers for audio applications. The company Incom is in the industrial applications and electronics business, supplying electromechanical and electronic components for demanding applications in different industries. Medical technology and laboratory equipment is also on Teqnion's portfolio, with the name InnoGuard, developing, manufacturing and marketing innovative laboratory and medical technology products. We all like food and beverage, just like Teqnion. They are also in this industry with Kema, which makes custom stainless steel fittings for professional kitchens, and Stanwell Technic, which develops dispensers, pumps and complex systems for liquids. We all know IKEA from Sweden. Well, they don't own IKEA, but they do own Keyfab, which supplies Scandinavian design lamps and home furnishing. We all like to be cool, so refrigeration and freezers is also on the portfolio with Marquis City, offering logistics solutions for professional customers, customer refrigerators and freezers. We have another company in the lighting business, Narva Scandinavia, which provides light sources and LED luminaries for industry, professionals and consumers. Another interesting business they own are food service vehicles. Reward Catering designs and markets uniquely designed food trucks and trailers. Now that fitness is so popular, we all know what a scale is. The only thing is that Teltec is a market-leading system supplier for industrial scales. We all want to be safe on the road, and Vicky Technic is just the perfect provider for complete system equipment for TMA vehicles, which are vehicles that ensure road safety. Walmec is in the automotive tools industry, designing and manufacturing special tools for vehicle repair and dismantling. Wyma Propulsion is on the marine and industrial gas turbines industry, which specializes in servicing of marine and industrial gas turbine installations. And that's a wrap on all the industries and sectors Teqnion operates. Each of these companies contributes to Teqnion's global presence and reputation as a versatile provider of niche, high-quality products and services. Now, how has this translated into financial performance? Don't worry, I'll try to make this as simple as it gets. But don't skip it, because even though numbers are not everything in an investment thesis, they are a handy tool. So this is how Teqnion makes its money. In 2022, Teqnion's revenue was a significant 1.3 billion krona. Breaking it down, we see a gross profit of 565 million krona. This is what Teqnion got to keep after they paid for the production of their products. When we subtract further operational costs like salaries and rent, they were left with an operating income of 130 million. Before paying income tax, their pre-tax income was 138 million, and after all was said and done, Teqnion's net income was 110 million Swedish krona. So, what took a bite out of these profits? Their cost of goods sold, or COGS, was 760 million Swedish krona, which covers everything from raw materials to employee wages to facility maintenance. Their net interest income was in the negative, showing us that they paid minus 10 million more in interest on their debts than they earned from their investments. Running the business incurs more costs, like operating expenses, which came up to 435 million Swedish krona. There was also a 100k payout to minority interest shareholders, who are not part of Teqnion but own a stake in the business. And of course, 28 million had to be set aside for taxes. It is worth noting that taxes in Sweden are high, with a 20% tax rate, compared with a 10% tax rate we saw in the last analysis of Amcor. Now let's delve into Teqnion's balance sheet. Think of the balance sheet as a photograph of the company's financial health at a particular moment in time. It shows us what the company owns, assets, what it owes, liabilities, and its net worth, equity. Teqnion's total current assets amount to 460 million Swedish krona. This includes everything that could be converted to cash within a year, like the loose change in your pocket. Within that, there's 47 million of actual cash on hand, 151 million of receivables, which is money owed to Teqnion by its customers, their inventories, all the goods they currently have on hand, which amount to 237 million, which is quite a lot, to be honest, and the last 24 million is in other current assets, which is anything else that can be turned into cash quickly. Switching over to their long-term assets, we're looking at 610 million Swedish krona. These are things that are valuable but not readily convertible to cash. For instance, Teqnion has 133 million in net property, plant and equipment, a fancy way of saying physical assets minus any depreciation. Their intangible assets, which are valuable but not physical, like patents or brand names, stands at 475 million Swedish krona, and they have 2.5 million in other long-term assets. Now on to liabilities. Teqnion's total liabilities, everything it owes, amounts to 626 million Swedish krona. Within that, current liabilities, the debts and obligations due within a year, are 353 million. This includes accounts payable and accrued expenses of 142 million, which is money owed to suppliers or expenses yet to be paid, and short-term debt and current lease obligations of 72.7 million. There is also a 7.4 million in other current liabilities. Looking at long-term liabilities, we see 124.5 million in long-term debt, money due more than a year from now. There's also 64 million in long-term lease obligations and 84 million in other long-term liabilities. Finally, we have equity. The total equity, the company's net worth, is 444 million. This includes 443 million in total stockholders' equity, which is what the stockholders would get if the company were to be sold today. There's also a 1.5 minority interest, which is a portion of a subsidiary company net assets not owned by the parent company, in this case Teqnion. The company also has 330 million in retained earnings, which are profits it has decided to keep and reinvest back into the business. They got 108 million in additional paid-in capital, which is the money investors paid to the company over and above the stock price. And finally, they have 3 million in other stockholders' equity. Let's consider the cash flow statement as something akin to a bank statement. It tells you how much cash comes in and goes out over a specific period of time. The statement is divided into 3 parts: cash flow from operations, from investing, and from financing. Starting with the cash flow from operations, Teqnion generated 105 million. This tells us how much cash comes from the main business operations. The inflow from these operations is 185 million, including a net income of 145 million from ongoing business. Then there's a 40.5 million in depreciation, depletion, and amortization. These are expenses that lower income but don't involve any actual cash outflow. Then the change in working capital stands at minus 47.6 million, meaning that the company tied up more cash into its operations. The cash flow from investing, showing cash spent or gained from investment activities, was minus 140 million. It includes cash flows from the purchase or sale of property, plant and equipment, PPE, as well as investments in stocks, bonds or other securities. Positive cash from investing activities indicates cash inflows from asset sales or investment returns. Next, Teqnion's free cash flow, or cash from operations left over after accounting for big investments, was 97 million. Now let's take a look at financing, which reflects cash gain or paid from activities like issuing or repaying debt and issuing or buying back stock. Teqnion's cash flow from financing was minus 4.3 million, with a financing inflow of 35 million, including 100k in net issuance of stock and 35 million from net issuance of debt. The company also paid minus 8.1 million in dividends, and there was a financing outflow of minus 39 million. Finally, we consider the overall cash change. Teqnion started the period with 85 million and ended with a cash balance of 47 million. So, this gives us a clear picture of how Teqnion generated and spent its cash. Remember, the cash flow statement is crucial because a company needs cash to grow and survive, even if it's profitable on paper. Well, now I'd like to discuss Teqnion's market position, their key strengths, weaknesses, and opportunities. Well, speaking of management, Teqnion is led by a dedicated and skilled team with an average tenure of 4.4 years. CEO Johan's salary is lower than the average for similar-sized companies, but it hasn't affected his dedication or the company's performance. Their business strategy is also a strength, since Teqnion's companies operate in specific industry niches, making it tough for competitors to catch up. The company maintains strong relationships with employees, customers, and suppliers. Their financial stability is also a key strength, since Teqnion shows sustainable growth with a stable turnover of 25 to 150 million Swedish krona. The company's profitability is above their target and they have a robust cash flow. For me, the biggest strength is how entrepreneurs find it easy to sell their businesses to Teqnion, and they often stay on the team. This ensures that business decisions are made by those who understand the business the best. I've heard Teqnion's Q&A, and they said that out of at the time they had like 23 subsidiaries, and out of the 23, 9 of the founders of those subsidiaries actually stayed on the team. Now a quick review on any competitive advantages that Teqnion might have. Well, Teqnion's decentralized model, similar to successful companies like Leafco and Roper Technologies, helps attract small businesses that are led by founders or families. The company's strength lies in its positive culture and strong management team. They believe in being kind, happy, making others happy, and making mistakes is okay. This unique culture and leadership have made Teqnion an attractive choice for entrepreneurs to sell their businesses to. I told you guys I was going to talk about their weaknesses, but I'll do that a few minutes from now. First, we'll take a look at Teqnion stock performance. Well, since its IPO in 2019, Teqnion stock has seen a CAGR, or a compounded annual growth rate, of 48.3%. Despite being volatile due to the company's size and limited volume, the company's 5-year CAGR for revenue, operating profit, earning per share, and book value stands at 46.4%, 51.5%, 22.5%, and 24.4% respectively. Even though this all sounds very good, let's discuss any noteworthy trends or events that have affected the stock price. Well, the stock's popularity among investors has led to a premium valuation risk. Its current PE, PS, and PB ratios are at historically high levels. And also, their PE relative to peers is fairly high.
Now let's get into their latest Q&A session highlights.
The CEO outlined Teqnion's growth since 2006 and its international recognition. Despite challenges such as recession and supply chain disruptions, efforts are underway to improve margins and maintain supply. The financial goals include maintaining a healthy balance sheet, ensuring profitability, and doubling earnings per share every 5 years. The company is actively exploring acquisition prospects. During the Q&A, topics such as the success of the road catering acquisition, CFO selection, and talent retention were discussed. The company plans to use free cash flow to offset share dilution and establish stability in the CFO role. Some earnout agreements haven't been met, but the company now sets more realistic thresholds. The company aims to support its acquisitions while fostering diversity and robustness in their offerings and clientele. Although inventory management needs improvement, there is confidence in the company's ability to sell inventory and collect payments. 2 energy-intensive UK companies were recently acquired due to their long-term potential. Despite the energy crisis, a planned increase in capex has been implemented due to supply chain issues. The company invites shareholders to assist in finding acquisition prospects, and emphasizes learning from other serial acquirers while carving its own path. The value of the industrial growth companies will be maintained, but specifics were not provided. The call concluded with an acknowledgement that Teqnion is in the early stages of its journey and ready to scale in response to market demand.
Since there's such a hype into this stock, I'd like to play a little bit of devil's advocate and tell you guys about some case studies of similar business models that failed and why they failed. I think this is very important, especially when people are so bullish about a stock. So, several conglomerates with similar business models struggled due to reasons like declining markets, internal corruption, poor lending practices, insufficient risk management, high leverage, and fraud. Notable examples include Dutch East India Company in 1799, Overend, Gurney & Co. 1866, Texaco in 1987, Nordbanken in 1991, Bre-X in 1997, Long-Term Capital Management in 1998, Flotex in 2000, and Equitable Life Insurance Assurance Society in 2000. Well, their struggles resulted from financial issues, fraud, poor management, market decline, corruption, excessive dividends, loss of legal battles, inadequate due diligence, dependence on key individuals, and lack of investment discipline. For Teqnion, risks include overexpansion, declining markets, and cult of personality. Intentional fraud and internal corruption seem unlikely due to insider ownership, and poor management is less of a concern given its strong leadership team. though dependency on key individuals is a big risk. Diversification reduces market decline risk. Excessive dividends, loss of legal battles, poor due diligence, and lack of investment discipline seem less likely, but the increasing attention from the investment community could amplify some risks due to valuation. Now let's point out some of their weaknesses, challenges, and risks. First, by analyzing the potential challenges and risks facing the company. Well, Teqnion's challenges include maintaining growth through acquisitions, competing with larger acquirers, valuation risk from its popularity among investors, dependency on its management team, and exposure to the cyclical Swedish construction market. I'd also like to present some counter-arguments or bearish perspectives on the company. Well, bearish perspectives point out the company's heavy reliance on acquisitions for growth, non-payment of dividends, change in the CFO position quite often, exposure to economic and geopolitical risks, and high expectations for earnings per share. Now, considering of potential market or industry changes that could negatively impact Teqnion. Well, potential negative market or industry changes include rising energy prices and slowdown in the housing market, as I already said. Sorry if I repeated this part a little bit, but I think it's super important to try to find counter arguments to a long position, because we are so biased to believe that this will be the next Berkshire or whatever it is, that I think it's very important to start by their risks and their weaknesses. Now let's move on to the most funny part, and the part you are all waiting for, the evaluation of the company's key factors and also its intrinsic value. Well, before we dive into our valuation, I like to make clear that my aim isn't to predict Teqnion's future outlook or current value precisely, but rather to document my investment learning journey and track improvements in my reasoning process. Now, let's proceed. First, we'll use the discounted cash flow model, DCF, a commonly used tool to estimate the value of an investment based on its future cash flows. We'll forecast Teqnion's future cash flows, discount them to the present, and compare this value to its current market price. This comparison will help us determine if the stock is undervalued or overvalued. Secondly, we'll utilize a comprehensive investment checklist to assess key business facets, such as the company's business model, competitive position, financial health, management quality, and industry trends. This systematic approach aids in revealing crucial insights about the company, thus facilitating a more informed investment decision. By integrating the quantitative DCF analysis with the qualitative insights from our checklist, we can gain a holistic understanding of Teqnion's investment potential. So let's get started. In our discounted cash flow analysis, we used a conservative 15% growth rate, reflecting Teqnion's track record of exceeding targets. The discount rate is rather standard, considering typical investment risks. A terminal free cash flow multiple of 20 was used, which is relatively low compared to the current multiple nearing 37. These assumptions yield a business valuation of about 3 billion and a projected share price of 213 Swedish krona, implying that Teqnion's stock may be overpriced currently. You might question if Teqnion's stock will ever become quantitatively cheap. For me, it's unlikely, but one potential approach, although influenced by a little bit of FOMO, is to buy in at a slightly overvalued price and gradually increase the stake as comfort with the business grows, and trying to lower your average cost basis. Remember, this is not financial advice, but simply a personal thought exercise on potential investment strategies. Now let's move on to the checklist. and more specifically to the long-term prospects. So, how does this company plan to grow, you ask? It's simple yet ingenious. By acquiring successful niche companies and not just buying them out, but nurturing their growth and enhancing their performance. This means the main source of profit is the cash flows from the operations of these growing subsidiaries. Sounds cool, right? Now, you might be wondering if this company is a serial acquirer. Yes, it is. However, it doesn't always need cash from financing activities. To be honest, they actually finance 50% of all their buyouts for simplicity's sake, and the other 50% is financed from their own cash. Its cash flows from operations usually handle that quite well, and no, it doesn't rely heavily on one customer, which reduces the risk significantly. And what makes that company stand out? Well, it's the competitive advantage it gains from its unique company culture and strategic acquisitions, plus it reaps the benefits of economies of scale, which is always a plus in the business world. And there's an intangible asset that's unique, its core values. This is where it gains high resistance to substitution. Okay, let's talk about management now. Management is known to fulfill their promises and forecasts. Their incentives? Fully aligned with shareholder interests. Their accounting practices seem transparent, but what about their financial statements? Well, they are totally understandable. That's a check in all the boxes for sound management. To be honest, I was very impressed with their annual reports since they were very simple and very transparent, and I really enjoyed if more companies did such good annual reports. Keeping in mind they are in Swedish, but I did manage to get the 2022 annual report from the Investors Podcast Network, and I translated the older ones from 2019, which, by the way, I will be sharing all the resources I used in this research in the video description, so you guys can do your own research. Let's discuss the financial strength and capital structure of this company. The cash flow has been showing steady growth with just a slight drop in 2022. What about debt? Under 50% of total capital. And the cherry on the top, owner earnings have grown at a steady pace of more than 5 to 7% or even more. Now that's impressive. And guess what? The company doesn't dilute stock through options. It doesn't have unrealistic pension fund assumptions, and marketing costs are not treated as assets. Even Benjamin Graham would approve, as it fulfills his requirements. It's a company of adequate size with strong financial conditions. Now let's use a bit of Nick Sleep destination analysis. Envisioning this company's journey 10 or 20 years down the line, the intended destination is to compound the current subsidiaries' cash flows and find more founders who align with the company's values. And how does it get there? By avoiding dumb risks and continuously learning. But this ride is not at all smooth. Potential roadblocks could be internal disputes and inability to handle more subsidiaries. While our DCF analysis suggests that Teqnion stock may be overpriced, the outstanding management team and their strategic long-term vision add significant intangible value. As of July 4, 2023, this extra value translates to a premium of 112 million Swedish krona, considering a 30% margin of safety, or 25 million krona when comparing it to our estimation of intrinsic value. This could potentially render Teqnion a great business at a slightly higher than fair value. Well, in this video we covered the following topics regarding Teqnion. We covered their history, business model, management, financial statements breakdown, market position, stock performance, Q1 2023 earnings call highlights, case studies of similar business models, challenges and risks, and their valuation and checklists. These discussions provide a comprehensive overview of Teqnion and its various aspects. Now, an ending note about Teqnion. Based on the available information, my concern about Teqnion is its current valuation and its ability to sustain growth in a challenging industry. The scalability of the business and reliance on management are critical factors to consider. It's important to note that investing in Teqnion involves a lot of risk, as it's a relatively small company with a relatively short but bulletproof track record. However, the early stage of compounding may present an opportunity for future growth. Well folks, that's a wrap on our journey into the world of Teqnion, a player in the serial acquirers industry that's as exciting as it's risky. Remember, this analysis is just a sneak peek into the adventure of investment. There's a whole exciting world of financial exploration out there, and every company has a story to tell. So why not become part of this thrilling journey? Stay tuned so you don't miss out in any other exciting analysis. Don't forget to subscribe so you won't miss out any future content, and I can't wait to see you all in our next financial expedition. Happy investing, everyone!